JSE all share change
Eleni.
of fortunes in midday trade, it seems, and FTSE also coming under pressure. In fact, we're starting to see a bit of a mixed day coming to the fore after having a positive start.
Correct, Eleni. Markets are at all-time highs. We've got the markets have rallied on good results out of IBM and Apple, and we've somehow ignored the results from Citigroup. We're seeing good corporate earnings coming through, and that's really what's been lifting the markets, and at these specific levels it's always good to take some profit off the table and wait and see where the market goes from here.
Well, as you mentioned, we did have some good numbers coming through from Apple, of course, as well from IBM. Citigroup, though, slightly disappointed. We are starting to see banks globally coming under slight pressure. What do you expect to come to the fore when you look at the other big names in the US?
Eleni, we saw JP Morgan's numbers coming out, and those were very good. I think banks internationally are still under pressure, as well as we'll be starting our local reporting season soon as well. So there is a trend at the moment that banking globally is going to come under negative, and it's going to be difficult for them with low margins and high debt levels to really produce earnings that they have done in previous years. So at the moment, negative bias, but we'll have to see if they do pull something out of the hat.
Looking at the inflation number, 3.5% for December year-on-year from 3.6% the month before in November. So clearly we're starting to see inflation slightly benign, and really a big difference from what we've seen coming through in the UK and the Eurozone, and also coming through from China. Of course, we're expecting that CPI number set to be released tomorrow, although the estimated number is sitting at around 4.6%. Yolanda, how do you think the market is going to take out this number that came through in South Africa today?
Henny, I think those numbers are obviously better than expected, but pretty much in line. We are struggling with high electricity costs, high rental costs, as well as and unfortunately what it does reflect is obviously not enough local demand and a slowing GDP. So it's unlikely that we're going to reach the target of 3% on our GDP, but it's pretty much in line. It's still within the target range, and it really supports the view that possibly we're not going to get an interest rate cut tomorrow.
Let's touch on Clicks, this company out with a sales update for the 18 weeks to the 2nd of January this year. We're looking at an increase of 16.8%. We know that it is off a high base. The stock was under pressure yesterday. It came down around 3%. Some are saying that it's looking slightly expensive. Others say that if you've got new money, you should be buying into Clicks. What are your sentiments with regards to the stock?
Eleni, investors should be quite cautious around the stock. It's had a very good performance. Its sales are phenomenal, but however, on the dispensing side, they're not able. They are seeing, and they're going to continue to see a margin squeeze on their dispensing side. And Dis-Chem is going to be more competitive in this space. So Clicks is well done, a good performance, but are they going to be able to perform for the rest of 2011? Are they going to be able to continue to maintain those sales numbers? And that's really what investors should be cautious about, and that's why we see that we expect the share price close to full, and therefore not, or rather very limited upside to that share price, Eleni.
We're also expecting retail sales numbers out a little later today. Many are calling 6.8% for the month of November, up from 6.1% the previous month. Where do you put your money, Yolanda? At this point in time, we're starting to see the South African consumer showing signs of life, a very different picture to what we saw in April 2009, where we saw retail sales contracting by 6.8%.
Eleni, correct. Nedbank's views that we will possibly come in at 6.7. We have had an increase of disposable income. We're seeing hopefully the effect of lower interest rates coming to the fore. However, consumers are still highly indebted, so we are looking for a marginal increase. But December is really where the numbers are going to be reflective of where our consumers are. So if we come in at 6.7, we'll be happy with that, as long as it's getting marginally better.
Well, it seems consumers are buying beer. South African breweries out with a sales update as well. 3% rise in volumes for the quarter, and we saw an increase in sales from Africa, from the likes of the Asian regions as well, and that's counteracting some losses and some pressure that came through in Latin America. SAB also looking slightly expensive, but we spoke to Graham Ledbeater a little earlier, and he did say that it is definitely something you should have as part of your portfolio.
Correct, Eleni. It's what we consider the sin stock. So SA Breweries has benefited from the World Cup. They have increased their sales. They've spent more on advertising, been very aggressive. So they are doing things right, and obviously China has really compensated with sales growth of 16%, which helped their sales number losses from Russia and from Latin America. They have been doing things right, and one just needs to be cautious going into the new year with the amount of money around in the market, free money. It is always a long-term stock, and they have proven their worth in 2010, so we expect to see some good things out of them in 2011.
Construction is also one of those sectors that many are talking about sector rotation and perhaps getting into the sector while it's still in the doldrums. Group 5 bears testimony to that when you see the trading update that was announced yesterday. First half profit will fall by as much as 25%. This stock under significant pressure in yesterday's session as well. Yolanda, what do you make of these numbers? Do you think that things are going to look better going forward into 2011?
Eleni, we can at this point speculate that the construction sector, especially after the pressure exhibited last year, they've come off quite a lot. Group 5 is one of those stocks that obviously benefited from the World Cup, so they haven't lost as much on their share price. We're looking at 5% last year compared to some of its competitors. However, we speculate that we are at the bottom, but the growth recovery in that sector is going to be very slow, with the global economy still under pressure, GDP numbers being pulled back globally, pressure locally. Are consumers really going to be buying that second house? Is our government going to be putting through tenders and following through, and really in terms of infrastructure spend going to do that in the next 2 years? So those risks all very, very real for the construction sector, but we believe that those stocks at the bottom with cautious outlook in terms of growth for 2011.
Let's touch on Sasol, a stock that gained 1.4% yesterday. It's pulled out of a coal-to-liquid plant in Indonesia. I mean, no surprise there, given that coal prices are very buoyant now because of the supply constraints coming through from Australia. They're going to be focusing on gas-to-liquid. Also interesting news that they're exploring natural gas opportunities in the Karoo. Your view on Sasol as a whole, given the fact that oil prices also looking relatively buoyant?
Eleni, what Sasol did last year is they went on a roadshow into the States, and they are really focusing on the gas to liquid production area. So for them it's positive for the stock, even though they really are focusing on that, and they're keeping to that strategy. So the pullback out of Indonesia is very positive for them. In terms of the fact that they're focusing on gas. The share price has had a massive run from 296. There are two things that would cause some more upside, and we believe there's a bit of limited upside on that. Is that if we see the rand weaken below 7 rand, and if we see Brent spot reach $100 and above, and those two things are the two high risk numbers. So limited upside at the moment, and we'll have to see how oil trades in the next couple of months.